Hey guys, so I am actually considering taking a trade on a 2 minute chart right now for a scalp. This is for the $100 challenge that I decided to do, and here's what I'm looking at right now. So as you can see on the 2 minute chart, we have a higher high, higher low, and I was actually anticipating buying here after the open, but I didn't. So then it ran up, bounced off of this um, support line, and I'm waiting for it to break over this candle here so that I can actually go long. My stop loss typically would go down here, but I'm being a little aggressive over this trade, so I'm going to go ahead and try to place my stop loss halfway once it breaks this candle. But because it's on a 2 minute chart, I'm actually going to wait until the candle closes over that bearish candle so that I can enter with confidence. Um, a lot of the time we get stopped out because we get in and the candle hasn't closed, and then it ends up stopping us out. And this is on the lower time frames most of the time. If you go on a higher time frame, um, most cases it works out on a higher time frame. If you open anything over, I think like a 4 hour chart, if you open at the break of the previous candle, you should be okay. 1 hour, it's hit or miss. Sometimes you'll hit it, sometimes you won't. But when it's like anything lower than that, I much rather wait for a close. Because anything after an hour chart, anything lower than an hour chart, will fluctuate, and it'll cause you to get stopped out because you think you're going bullish, right? But the volume and the momentum on that smaller time frame isn't there. It's not as strong, right? So for this trade, I don't know what the playout's gonna be, right? As you can tell already, what I literally just said played out. So if I was to buy it right now when it broke out here, um, I would have gotten in and then I would have gotten excited for maybe 2 seconds, and now it's going back down, right? And now I'm anticipating it like hitting my stop loss. I'm having these emotions and everything. You don't want that. You want to be able to control your emotions while you're in these trades. So, what I'm doing is waiting for this to close. Now, if it closes and it's wicked over the previous candle, that doesn't count. It has to be a bullish candle breaking the previous bearish candle. And in this case, we're still waiting. So let's just watch and see what happens. I'm risking $31 on this trade. I had taken a trade last week, I believe, just to start it off. I'm at 123, 125. So if I lose this trade, I'd be at $90. So we'll see what happens, but I'm waiting for the close on the 2 minute chart. Let's see what happens. See, in this, okay. So it closed over. I'm going to go ahead and open my position. Okay, we opened our position. Now we're just going to wait and see what happens. If it gets stopped out, then I'm done for the day, and I will have to wait for another opportunity. After this plays out, if in fact I do get stopped out, I want to show you guys the reason why I took the trade on the 2 minute. I don't I don't do my analysis on the 2 minute. The 2 minute chart is literally only for entries. So I'm getting in on a 2 minute. But my analysis was taken on the monthly, the daily, the weekly, and the 4 hour chart. So um usually I would take my trades on a 1 hour chart. like the entries, because they're better stop loss areas. In this case, I feel like I put my stop loss way too close. As you can see, like it's getting to my stop loss already. But I'm just gonna hold it and see what happens. We'll see how it plays out. That's the danger about trading the 2 minute, and that's the thing that I don't like about the 2 minute. I don't always trade the 2 minute, but because did it stop me out yet? It's touching my stop loss, but it hasn't closed me out. Okay, I got stopped out. All right, guys. So I ended up getting stopped out in this trade. Something I reflected on after I got stopped out, and something I got to thinking about was it's important for us to review the mistakes we make as traders because that's how we learn. If we do not review our mistakes and figure out what we did wrong, then we're going to continue to make the same mistakes over and over again. In my case, I got stopped out, um, and I actually already found the mistake I made. If I like, I had to sum it up. I took a trade without actually looking at my full analysis and taking it all into consideration. Second, I took the trade deep down. I probably took it just so I can make a video on YouTube. And that's the hardest thing to admit right now. And it's a mistake that I paid for. It's a $30 loss, yes, but I'm trying to get to $1,000 so I can start breaking those barriers. But if I keep making these same little mistakes, then I'm not going to even get to that goal. So that's what I'm getting at. So the mistakes I made this time around is I didn't look at the big picture. So you have your monthly chart here, right? You have your weekly, your daily, and your 4 hour. The monthly is bearish, as you can tell, and I put these little labels on there so I can figure out whether or not what's direction the instrument is going. On the weekly, it's bearish. So the monthly is bearish because it broke this higher low here, right? And the weekly is bearish because it's been on a downtrend this whole time and it has yet to continue, or it has yet to break a point of structure, as you can see here. So these two are bearish, the monthly and the weekly. The daily has turned bullish just because it consolidated and it's actually starting to go up. But if you look at the bigger picture, the daily chart really is only bullish because of the weekly's pullback to its swing point. See what I'm saying? So it's not exactly turning bullish. It's just simply going to a swing point or pulling back on the weekly's downtrend. And as far as the month goes, it just started a downtrend on this one. So that is how I look at the big picture and I make that decision as far as like, okay, well, we have the monthly going down, we have the weekly going down, and the daily's only going up because of the pullback to the swing point of the weekly. And then my 4 hour sometimes, and this is the one thing that I will say. Sometimes it looks scrambly, as you can tell. It's not easy to read. Um, Look at this 4 hour. This is okay. I can read that easily. But lately it's been giving me weird looks, as you can tell. It's just been going up, down, sideways. This is shorter term, if you will, if you're trading during the week. So it helps whenever you're trying to swing trade or you're trying to day trade. The 4 hours typically where I would look to enter, right? And sometimes, of course, like I'll look at the 1 hour chart. So if I exit this, look at the 1 hour. So day to day, you can trade the 1 hour and it's fine, right? But even then, like it's still kind of scrambly. And I only trade the 1 hour based off of the 4 hours um, zones that I've created. So as you can tell, once you start going into the 1 hour and um, the 4 hour and anything lower, the chart starts to fall apart a little bit, and that's where you kind of have to stick to the higher time frame bias. In this case, you want to stick to your monthly, your weekly, and your daily, even if you're swing trading. Guys, this is something that I feel like not too many people talk about. Even as a day trader, you need to know the higher time frame bias. If you don't know the higher time frame, then you're going to end up making mistakes just like I did today. That is a perfect example of what happens when you don't look at the bigger picture. You end up making these mistakes thinking you're in the right direction, and then you end up getting stopped out. In my case, I got stopped out because the monthly and the weekly are bullish. I mean, bearish. They're going down. And they're only, the daily is only going up because it's going to a swing point of the weekly. So just keep that in mind. Typically, if you don't have at least 3 charts in conjunction, or it's all like, and this 4 hour is not, this doesn't count because I didn't even like I said, it's in decision right now. It hasn't given me a bullish or a bearish direction. So the 4 hour chart, I know I had it as a bearish going short, but it doesn't count. The monthly and the weekly are bearish. The daily was bullish for the pullback. That's it. But bottom line, my analysis, I didn't really pay attention as much as I should have, and I had to pay the price for it. So for the next trade that I take, I will make sure to wake up early. I also woke up late today, which also played a big part as to why I made another mistake. I didn't get on the desk on time. Additionally, I've been really tired this week where I haven't been getting enough rest. I've been going to sleep at 2 in the morning, waking up at 7, and I'm getting 5 hours of sleep every night. That is also playing a big part. You may even be able to tell by the way that I'm talking and trying to articulate certain words and certain things. Like I'm still having to think about what I'm talking about because of the lack of sleep that I have. So sleep is a major piece of it. Me actually getting on the charts and doing my analysis on time is a big part of it. There's several variables that played a part in why I got stopped out today. It's not just because the markets were against me. I broke rules and I paid the price for it. So, to anyone out there watching this and taking advice from me, if you break your rules, chances are you're going to lose. And if you get stopped out and you follow your rules, then it's just one of those situations where, rare case scenarios that you ended up getting stopped out. But 9 out of 10 times I get stopped out. I end up getting stopped out because I break my rules. 9 out of 10 times. So something to keep in mind. That's all I got for today. If you have any questions, comments, you want any advice or tips, feel free to comment below any questions that you have. Click that notification button for the next video and subscribe so that you can catch up on anything else that I post. Awesome. See you next time. Peace.